Hello my YouTube friends, it's Richard, founder of Short-Term Rental University and Airbnb Superhost. Today's video is about where we are in the world economy and what risks I see, and I feel compelled, like I need to share this with you. I've been doing it a little bit in the past videos. So in October of 2017, I said I didn't really like where the markets were and I was taking some money out and investing in a new development, pre-construction at the Snake River Sporting Club. I'm basically liquidating all of my savings, whether they're stocks or IRAs or whatever it is, to get enough liquidity to participate on a scale that I've never participated before. So think about that. I'm basically making a big asset allocation away from equities and savings and safe investments, and I'm putting it in what the majority of the world thinks is like a risky investment. Oh, you're gonna go into like short-term rentals on Airbnb and real estate? And then in September of 2018, just 4 months ago, I warned again that I really didn't like where the stock market was. I can't believe how my timing was almost perfect. We then proceeded to sell off over 20%, like really quickly and violently, and we bottomed at December 24th, and then since December 24th to now, it's a February 13th or so, we've pretty much clawed our way back. So what's going on? What's happening in all this volatility, and what can we do about it? So at the Tony Robbins conference, he was really going off about how winter is coming and how you have to prepare for winter. And he's entirely right. Now, mind you, he gets paid $1 million a year by one of the best traders in the world. Paul Tudor Jones has paid him $1 million a year for Tony Robbins to coach him, I don't know, since like 1989 or something like that. And for those of you who don't know who Paul Tudor Jones is, Google him. He made a fortune in the 1987 stock market crash. He was a young guy, and he called it perfectly, and he made a fortune for his investors. He's continued to be an incredibly successful investor. In my prior life, when I invested in hedge funds, I sat across the table from Paul Tudor Jones and ultimately invested in Paul Tudor Jones and his fund. So he's a great guy and a great market timer and a great trader. And funny story was, we had a meeting with him and it was about 10 o'clock in the morning, 9 o'clock in the morning, and the dude pulls out like a chicken drumstick and starts gnawing on it. He's from the South, he's got his own style and methodology, but I'll never forget, world's best trader just sitting there chewing on a drumstick while I'm all dressed up, buttoned up in a suit, and he's breaking it down for us. Back to reality here. So, we're long in the tooth, longest stock market ever. I talked about taking some chips off the table and did so in October of 2017. I warned again in September of 2018 that the market was really looking very precarious to me. It sold off really quickly, it rallied back. So what's one to do now? Well, I think that everybody should be thinking about lightening up, raising some cash. And where to begin? I wouldn't go all out to cash, and I certainly wouldn't be selling things if they're taxable gains. But when the market does roll over, and it's looking like it's going to happen in the near future, sell your losers, sell the underperformers, sell the lower quality stocks because they will fall more. So the high quality stocks, the high quality real estate, the things that you have most confidence in, those will likely also sell off, but to a lesser degree. But the kind of crap around the edges, the things that you thought were going to work out and they were going to generate all this return, if that hasn't really happened, don't wait anymore. It's unlikely that it's ever going to happen. If it didn't happen in the world's greatest bull market, it's certainly not going to happen in a bear market. Believe you me. That's sort of like, Trader 101. You sell your losers first, and that can sometimes be your best trade. So anything that you have question marks around, whether it's this home isn't really quite working out, this location isn't really working out, this stock isn't really working out, shed that. Hold on to your highest conviction trades, your highest quality locations, your highest quality homes, your highest quality stocks, because even though they will sell off less. But once you've sold off the losers, the stuff that just really didn't work out, and you haven't really paid attention, you haven't been monitoring it, once you sell all that and you've raised a little bit of cash, you've reduced your risk. When you go into that dislocation, you're going to be much less fearful. In fact, you're going to have some dry powder that you might be able to reallocate at the lows or the bottom. Buy that house. That house that you were looking at, it was $500,000. Maybe it gets slashed to $400,000. Maybe you put in a $350,000 bid and you get it for $375,000. I'd much rather buy a house at $375,000 than $500,000. And what I'm warning is that next move is going to be down. I don't know that it's going to be tomorrow, and I don't know how long it's going to last, but I do know with fairly strong conviction that we are in for a rough ride over the next, I don't know, cycle, year, 18 months. So what am I doing personally? I'm lightening up. I'm selling this rally. I've been waiting for the market to recover, which it largely has, and now I'm going to start to exit. And guess what? I'm not the only guy thinking that. All of Wall Street's doing the same thing, and that's likely what's going to cause this sell-off to occur. Once people get back to where we were before, they don't feel so bad about selling. They think about taking their profits and exiting. And same with everybody, the guy next to me and next to him and on this desk and that desk and on this street. So that's what compels that same sort of like recovery to stall out and then fade. Now, I'm not predicting an apocalypse, and we're not going to go to zero, and the US stock market and the US economy is still the best and most robust in the world, and I'm still long-term bullish. But I'm talking about a tactical opportunity that I see to lighten up, lose the losers, and then have some dry powder so that if I'm right, when I'm right, you can take advantage of it and get some more alpha into your portfolio. So what else can we do? Well, if you're really bearish and you really think the market is going to roll over, you can actually go long some puts, which is basically an expression of a bearish sentiment. You could go short some stock, although that's really risky. I don't recommend people that don't have experience short stocks because you have limited gain and unlimited risk, right? A stock could go from 100 to 0, which would be your gain, but it could go from 100 to 1 million, unlimited loss. But by using option strategies, you can limit your loss to the premium that you paid for the option. So if this sounds like something you want to do, speak to your financial advisor, I don't know, DM me or leave a comment below. But there's all sorts of portfolio type insurance that you can take that I wouldn't really advocate during normal circumstances in a bull market. But once we get toppy up here and we think we're going to roll over, it might be time to think about buying some puts on the S&P 500. Or if you've got a very large position in one individual stock, let's say Apple or Microsoft, you could buy puts on that individual position. I wouldn't buy so many that you negate your entire position. At that point, you might as well exit your position. But if you're long-term bullish, but you want to protect a little bit of the downside because you're worried that you're going to get uncomfortable and maybe feel that necessity to sell. Oh my gosh, I can't believe how much money I'm losing. All my gains are gone and now I'm underwater, and you start to panic and freak out. And if you've got that propensity to like sell at the bottom, you don't want to do that. Again, you want to be buying at the bottom. So you might buy some puts, mitigate some of that risk, ease some of that discomfort so that you can ride it out until we come over the valley, down, and then back up. So go ahead and let me know what you're doing, where you think we are in the cycle, what other opportunities you think there are for people to mitigate their risk and take some downside. But the main thing is, if you agree with me, if this resonates, if you think I'm right, don't do nothing. Do something. Sell one share. Sell one house. Take some action so you feel like you're in control. And then when you're right, you build your confidence and you slowly start to say, gee, this is starting to make more sense. I'm getting comfortable owning stocks. I'm getting comfortable owning real estate. This is really kind of making sense. I'm not just riding the wave. I'm actively managing and thinking about this and making calls and bets and taking calculated risks and getting good returns, and this all makes sense. And this dude over here is trying to help me, which I really am, and I really appreciate your time and your energy. So come on, like the video, leave your questions below, and let's just get ready, because Tony Robbins is right. Winter is coming, you gotta get ready. I'm going skiing, yo. We're gonna make some money on spring. How about that? See you soon.